You're welcome to the second part of Business Africa. When will the current war on oil prices end? The question resurfaces as the price of black gold continues to fall, despite an OPEC agreement to reduce world production to 10 million barrels per day. And the decision, however, is not respected by many of its member countries, including Saudi Arabia. Claudia Sono and Bridget Ugwe took interest in the future of the organization, which is becoming increasingly fragile and now facing a global crisis without precedent for more than 20 years. Take a look. Global oil demand has fallen by more than 27 million barrels per day, nearly 30%, following confinement measures taken to contain the novel coronavirus. The situation has put to question the fate of the Organization of Petroleum Exporting Countries, OPEC. According to energy specialist Sebastian Wagner, prospecting the death of OPEC would be an exaggeration. The cartel was at the center of one of the biggest stories of 2020, following the signing of a historic agreement that resolved the oil price war between Saudi Arabia and Russia. Members of the organization agreed to massive production cuts of nearly 10 million barrels per day from May 1st. And while low demand remains a concern, OPEC said it will continue to provide economic relief and save jobs around the world by stabilizing the oil market. Faced with the economic impact of COVID-19 and the indefinite low oil demand, oil-producing countries will need to work together to find ways to keep the industry alive. The current crisis experienced by oil-producing countries does not seem to influence oil production in the Republic of Congo. The country recently signed an oil production sharing deal which includes the exploitation of gaseous hydrocarbons. The contracts could eventually deliver more than 500 million barrels of oil over the next 25 years. Malka Dibi and Jean-David Mihamle with details.
The independent Franco-British oil company Perenco has won 2 oil production sharing contracts in the Republic of Congo in the space of a week. The first contract involves Perenco and the state of Congo, represented by the Société Nationale de Pétrole de Congo and the joint venture Congo Rep. The contract concerns the former Emerald Block 2. It has an operating life of 20 years and contains additional reserve estimated at 56 million barrels. Perenco has committed to pay a $5 million signing bonus and $1 million in social investments. As Emerald 2 is a former oil development, Perenco is committed to pay an abandonment and reclamation provision of $95 million. In the second production sharing contract, Perenco SA is associated with the National Oil Company of Congo and 2 private companies, Petro Congo SA and the African Oil and Gas Corporation in the Kombi-Likalala-Libondo 2 block. The duration of the production has not been specified, however, reserves are estimated at 530 million barrels.
We will have to leave it at that for this edition of the program. Kindly follow us on Facebook and Twitter in English or in French. Thanks for watching. Do enjoy the rest of your viewing. Until next time.